Hi, everyone. Good to see all of you join this live session. Once again, if you can hear my voice and you can see me on your screen, let me know in the comments. You are super welcome to my live session. Good to see you guys. I can see that some of you have started joining, and I want us to just have a discussion about the markets and see what the markets hold for us. And if you cannot hear my voice, you can simply let me know in the comments so I can make adjustments as we're just starting. I don't want to speak and talk and then only for me to realize that my audio is not clear. So it's good to see all of you guys. If you can see me on your screen, let me know. And make sure you drop your location with me. Drop your location in the comments. Let me know where you're watching this live session from. Good. Thank you. I can see Christian from Germany. Okay, thank you. Somebody said yes. That means you can hear me. Um, Let me be sure that all of you can hear me before I can say anything else. Okay, thank you. Anthony from Kenya, Ravash from India, can see Abuja, I can see Ibadan, I can see so many of you from different parts of the world. Okay, good to see you. Good to see you. Good to see all of you. Poland, Nigeria. Basically, we have a lot of people here. We have a lot of people that are here. We have a lot of people that are here. South Africa, Botswana, I can see Nigeria. This is your exact setup on gold. Yes, I actually took this trade today on gold. Perhaps I will just show you a very brief screenshot of that exact area. But then I just want us to see what are the things that makes for a great trader. Now, if you look at this video carefully, you will see that I titled the video 45% win rate. That is to tell you that as a trader, you don't need to have 100% win rate to become profitable. Yes, trust me, you don't need to have 100% win rate to become profitable. As small as 40%, 45% can make you profitable. And that is one of the secrets of trading. When you start treating trades or trading as a business or as a lifestyle, you begin to see how easy it is to remain sustainably profitable. But then when you come into the market and all you're thinking of is, let me just make this money for this week or maybe for this day, and then I'm never coming back again. Maybe you are a gambler, but if you are planning to become a professional trader, you want to do trading for a while or for a long time, you need to treat trading like your business, like your life depends on it. Okay. And when I say that, I don't mean to say you need to become a full-time trader to become profitable. No. All you need is to have a plan, So basically, we're just going to go through some of the things, some of the basic setups and everything that will make you truly successful. How many trades do you need in a day? Or how many trades do you need in a week to become profitable? Let me just have a random sample in the comments. How many trades do you normally take in a week? I just want you to be sincere. You can drop it with me in the comments. How many trades do you take in a week as a trader? Just say it. Just be specific with your own self. Don't generalize for everybody. Somebody said 3 to 4, 5 trades. Okay. I can see 5 trades. 5 trades. That's good. I think that's a very, very good one. 2 trades, absolutely good. So that is to say that most of you know what you're doing. Just one is enough for me to make profit. 2 to 5, 1 trade from Deborah, Oseni, 3 trades, Kene, 3 trades. That's a good one. And trust me, it is not from the volume of trades you're taking. It is the quality of your trade that makes you profitable. All right. Now, the second question is, what is your average risk to reward ratio? Average risk to reward ratio. What is the average for each trade? Somebody says sometimes he doesn't take trade. It depends on what the market has to offer. 1:3 quality over quantity. That's true. 1:2, 1:2. So now let's just do a math of what it is to take trade and then follow it based on percentage. Now, for example, if I have, let's say this particular trade, I actually took this trade and then I was expecting, if for any reason price will decide to come down to this fair value gap. I know some of you might have seen this. When this happened today, you might have seen that there was a fair value gap resting here. Yes, just here. There was a fair value gap resting here. So if this didn't work, this guy might work, right? So my stop loss was carefully placed here. Anyway, I am out of this trade already. I'm already out of the trade, but then I just want to show you guys what is happening. I am out of the trade already, and that is for you to know, okay? But then look at this. If this is my trade, let me click on it. Let's assume that I am taking my profit somewhere around here, all right, for this trade. And then I'm going to show you how to strategically position yourself to take a certain number of profit in a day according to the session you're trading. The reason why most of you take trade and then you end up losing back or giving back the money after you have made some money only for you to realize that price came back to entry is because you don't have an average expectation of what you are doing or what you should be expecting the market to give you, right? Most people don't know that every session has a certain threshold of pips you must have, or you would have, or you probably will have from that particular session. I know some of you know, but then some of you don't know. I took one trade and scale. Now, do you know that out of your 3 or 5 trades, 5 trades, right? We have an average of 5 trades. 1:2 is the average I've seen. Do you know that if you end up making, if you have 3 losses, 2 wins, and you're taking 1:3 for each of your trade, do you know that you will still remain profitable with 3 losses in every 5 trades? Now let's even give it 1:2 average. 1:2, right? Some people do 1:2.5 or even 1:4. Now, for every of your trade, let's say you have a $10,000 account, right? $10,000 account, and you are risking 200 for every trade. Okay, you're risking 200 for every trade. Now, for you to lose 3 trades, you may be talking about, or you will be talking about, that should be $600 in loss, right? $600, right? Now, how about your wins? If you end up winning just 2 out of these 3, and each one is 1:2 what? 1:2, you would have what? About each one of these, you would have about $800. All right, you would have about $800. Is that not what you do for calculations? You would have about $800. So 800 minus 6, you will still close the week with at least a decent profit. Now, it's for those of you who have your personal funds. Like if you're trading with your personal funds, you have your personal account, you can do this type of mathematics. Do not be tempted to do impulsive trading. Impulsive trading is very, very bad for your trading psychology. What did I say? Impulsive trading is very, very bad for your trading psychology. Most people don't understand that. Every time you mount pressure on yourself to be in the market, you are doing more harm to your trading psychology. Okay. you are doing more harm to your trading psychology. The best of the traders know how to wait, prepare for the short, and when price finally comes and give you the opportunity, you're going to take it. uh, I can teach you all the strategies in the world. I can teach you what is working for me, but then with a very bad mindset, you cannot become a good trader, right? You cannot become a good trader. Now, by the way, for those of you who are here and you don't know me and you're just joining this market, I will tell you two things. First of all, learn or get the knowledge. After you've gotten the knowledge, take your time and practice. All right. Take your time and practice before you finally start trading. Now, there are two things that every trader needs to understand every time. All right. There are two things that every trader must understand. Number one is that there is difference between information and the truth. Information and the truth. Let me type it here. All right. Um, Information and the truth. These are two different things. All right. These are two different things. Information and truth. In this industry, you need to differentiate these two things. Just because you have an information, it does not mean you have the truth. Right? It doesn't mean that you have the truth. Truth is an absolute knowledge, while information is just a random knowledge. It may not be necessarily helpful to you as a trader, but then truth is an absolute knowledge. What truth gives to you in the market is an exactitude of what to expect, what to do. And that is what most traders don't have access to. If you don't know the truth, you will end up becoming frustrated. I saw somebody dropped a comment in one of my videos. The guy looks really frustrated and tired. And it's not my fault that you're losing in the market. It is basically some of the things that um, every trader passes through. As a trader, you must differentiate the difference between information and the truth. And there are only few places you can find the truth in this market. I am telling you, I assure you for that. My trading account is bleeding because of me. Okay. Structure shift. These are basic things. Now, there are some of you here that are here to just learn the basics of the market, right? Now, I have a mentorship apart from my YouTube videos. You can go to my YouTube videos, have a random knowledge that I've just shared, scattered all around my videos. But then if you want to have a concise knowledge, you need to be in my mentorship. And that mentorship will cost you. You can simply use my WhatsApp link in the description of this video. Reach out to me. If you cannot afford my mentorship, I also have a book which is out there with a lot of testimonies. Those of you who have gotten the book and it's helping you, you can just tell them in the comments. It costs just about $9.9. The link to get the book is in the description of these videos. Okay. So for those who are still lacking in knowledge, but then I'm telling you this so you can have a basic understanding. All right. So now can we delve into analysis? Can we delve into analysis? Which of your trade did you take today or over the week from Monday? Today is Tuesday. If you have taken any trade and it didn't work, can we analyze and see why it didn't work? Just drop it in the comment. I'll quickly go there. I will pick the first 5 I've seen. Just drop 5 of your trades, or just randomly. I'll just pick 5. Euro USD. Which day? Was it yesterday or today? Took SL today at gold buy. Okay. Joy polled say okay, BTC. So let's get them. Let's get them here. We have let's do gold. Okay. Gold, EU, GJ, BTC, and what else? Let's see. Let me be sure. Somebody took a trade on DXY. UJ for SL. Just tell me the direction of your trade and then I will make sure that I check what happened. Is it UJ? Okay, UJ. Somebody gave UJ. So let's start from gold. Somebody got stopped out from gold and it was a buy trade. So let's do analysis and see. Right? If I were to trade gold today, earlier today, I'll go to the daily time frame. Those of you who are in my mentorship, there is one of my students that predicted price coming to this fair value gap. Yes, this fair value gap was one of my students that predicted it. That price is expecting price to come into this fair value gap. Obviously, if you are in my mentorship, you would know what we did. But let me just give you the opportunity to learn what happened. All right. So we had this guy. What do we call this? Buy side liquidity cleared. And we have another liquidity resting here. Don't forget that liquidity is in levels. All right. So this entire area is called liquidity pool. But then this is the first liquidity area that price actually cleared. And what do we expect to see price do? After that, we expect to see price come down and fill up this imbalance. There is an imbalance here. So price started from where? Moving, creating a break of structure. Most of you don't know how to do top-down analysis. And that is one of your greatest unbecoming. So please make sure you learn how to do top-down analysis. If you don't know how to do it, come and subscribe for my mentorship. I will teach you that, all right? Whether you are in need of one-on-one mentorship where only me and you have session, or a general or group mentorship, all right? So this is what happened. Buy side liquidity cleared. So on Monday during our live session, my student said he is expecting price to trade into this fair value gap. Unfortunately, it didn't happen on Monday. It actually happened today. Now, there's also something very, very significant. Price took out the low or the high of Friday's high, just the liquidity resting above here. Price actually took it out and the pressure is coming down. Now we are hitting a fair value gap in confluence with a old high here. This is what we call the IOFED, Institutional Order Flow Entry Drill. I don't want you to get bored with all the words. Just know that this is a high. Price came. We have this guy standing as a mitigation block, also this area. So price tapped into it. So earlier today, when I woke up and I saw that there is a fair value gap resting here, I knew that something was going to happen. But how am I going to know it? I dropped down to the 4-hour time frame. Now, when I came to the 4-hour time frame, what else should I be doing? I will need to know what has transpired over the movement of price, right? Now, I looked at this place and I saw that price had a shifting structure bullish and break of structure bullish. Price came back to fill up this fair value gap, which is very, very important. What else should I be looking for? Institutional reference points. That is to say that we should be paying attention to all the institutional reference points. I have what here? I have a fair value gap resting here. Now, I know what happened to Joy Paul, right? Was that what happened to you? Was that what happened to you? I know that this guy got stopped out because he took trade from this fair value gap, this one. I know that was what happened to you. That was why you got stopped out, all right? You probably took trade from this fair value gap, and I don't know what type of confirmation you used for the entry, but then there was something that happened, right? If you take trade from here, you probably might be in pain by now, right? Joy Paul, it was because of that fair value gap you took the trade. And I know it. I knew that the people that took it here, if you're not paying attention to the details inside, you may get stopped out. Now, if you go down to the 15-minute time frame, you will find out that look at what happened right here. There was a shift in market structure. I saw it earlier today. I saw it earlier. It's just an oversight that some of you got stopped out. There was a shift in market structure here, right there. That was a shift in market structure on the 15-minute time frame. This is a good confirmation for entry. Now, for those of you who don't know how to use confirmation for entry, the more reason why you need the Smart Money Accelerator Guide. I don't know why some of you don't have it, but you can get it. The link is in the description. There is a confirmation you need for every entry. Confirmation you need for every entry you are taking on your trades, right? Let me see if I can share my screen to show you. Yes, where can I find the book? Windows. Yes, let me do that and be sure that you have access to that book. What is that? Okay. Okay, this is the book. You see, trade models under trade entry confirmations. There are so many entry confirmation I've made mention of in this book. This is not a literature. You may get the book and find a lot of typographical errors, and don't worry, just get to assimilate the knowledge. That's the most important thing about it. All right. So get the book is in the description of this video, and also, and then those of you who are starting your trading journey, if this is your first time, you don't have a broker, I have a recommended broker for you. It's called Hot Forex. You can just find their link in the description of this video also. All right. So get your first trading account with Hot Forex. The link is in the description of this video. This is not a paid advert. I'm not paid to say this, but then it's a broker I have used for a while. I can recommend it for you. All right. So you can sign up with Hot Forex. The link is in the description of this video. So let's continue with that. I don't want to get distracted. All right. So coming back to gold, price had a shifting structure, but then I was skeptical, guys. I was skeptical. If I went long from here, come on, guys, my stop loss needs to be here. And that was what happened to Joy Paul. That was what happened to him. I know exactly. I'm just in his mind. I know what happened to him. All right. That was what happened to him. But then I was careful enough to look at the 1 hour time frame. I don't even know what came on my mind today. When I looked at the 1 hour time frame, I saw institutional trap here. This is what I call the smart money trap. Can you see these relative equal lows? Relative equal lows, and then price tried to come into the fair value gap the first time, got rejected. I knew something was going to happen. My patience was not subdued. I had to be patient to wait for price. So I had two fair value gaps here. It is now left for me to decide. But then one last thing I did was that I saw a very big order block, a bullish order block here. A very big bullish order block, we need the mean threshold, and that is going to be the 50% of the body, right? That is the mean threshold. The 50% of the body is that guy. So I was expecting price to respect this area in its entirety, all right? In its entirety, this area. So that was the simplest thing I did. And I saw price traded into this guy. Boom. My stop loss was intentional. I was intentional about my stop loss. I took the trade right here. I wanted to target that place. My stop loss was right below here because this is where the main threshold of this bullish order block stopped. All right. So I was expecting price to respect that area. All right. So that was what happened. So it is simply because you didn't exactly same. Yes. Simply because you didn't pay attention to all the details. Yes. Thank you, Mr. Ade. Thank you. Thank you, guys. Thank you, guys. So this trade, I took $800 from this particular trade. $800 in my, this is not a prop account, it's a live account, just normal live account. I wanted to show you the trade anyway on my mobile phone, but I don't know how to do it. Why did you come out of the trade, sir? Yes, I came out of the trade because it's evening already, and I still have this concern with this area. All right, I still have this concern with this area, and coupled with the fact that I saw DXY responding to some kind of a strange area. All right, I saw DXY responding to some kind of a strange area, massive push up to that area. I needed to see some confirmation on DXY. Of course, DXY doesn't have a much correlation with gold. Gold is a commodity, DXY is a currency. And I was actually expecting this guy also. Yes, this place, we talked about it. Some of you who are in my mentorship know it. We talked about it. But then, boom, price went up. And trust me, I had some doubts. So if DXY is going to buy, no matter how, we're going to still see some dragons on gold, right? Gold may have some difficulty. So instead of me to give back my money to the market, I had to take it. So let's go to the next guy. What was the next thing to analyze? Please tell me, let me know. Yes, HFM. Please, if you have any bad experience with HFM, you can let me know. But as far as I know, HFM has been my broker for a while. I'm not just promoting a broker that would put you in trouble. If you have any trouble with them before in the past, you can let me know. Hmm? Okay, good. GJ. Okay, let's do GJ and C. GBP JPY. Let's do GBP JPY. So what happened? Were you stopped out? I saw this today. I saw this today. Thank God I saw this today. I knew that this fair value gap was going to attract price. You know how I knew? Because the previous time we had something like that, price came back. Hmm? Price came back. So this one is an institutional trap. I saw a bullish order block here and a fair value gap earlier in the morning hours. Yes, I'm not doubting this. I saw it, and on the 15-minute time frame, there was an enticing movement that will make you think that price was going to move. But then I looked at the 4-hour time frame, and I saw that there was a resting fair value gap down here, and that was what actually prompted me to leave the trade. So what happened to you? Were you in the trade? It's time to melt. GJ took it. It's time. I have already talked about gold. Please, if you can watch the video again. Right, GJ took it to melt. I don't understand what you mean, GJ. So that was what happened to GJ. So I am going to go bullish on GJ, but then not now. You know how I'm going to go bullish on GJ? I am going to go bullish on GJ as soon as I see price confluence with this guy. This is not even open for any negotiation. This place is your target. As soon as you see confirmation here, that is your target for entry. All right, this area. I know price is going to wick into this, but then you're going to have confirmation around that area. And that is your entry. Price is going to create a new high, boom, into this area. And that is your trade. All right. Look at what is happening around here. Expect that guy to create the move that will give you the next move. This is a nice trading model. All right, nice trading model. So let's do BTC. BTC. All right, let's do BTC and see. BTC USDT. I have limited time actually. I will soon be off. I just thought to come online. Just about 28 minutes. Let's do BTC. BTC, BTC, BTC. Okay, so can you guys see my screen on BTC? Can you guys see my screen on BTC? Just let me know before I go on. Yes, I start all my analysis on the weekly. I start all my analysis on the weekly. I don't trade the weekly, but then the weekly gives me an idea of what happens or what is going to happen on the long run. All right? What is going to happen ultimately. Okay, so you guys can see my screen. So here is BTC. Let's go to the weekly. Now, you guys should tell me, what do you think the weekly is up to? What do you think the weekly is up to? What do you think the weekly is up to? Do you think this is enough for price to be satisfied as a fair value gap? We tapped into this guy, but do you think this is enough for price to be satisfied? I wish there is a unit for measuring thirst in humans. Is there any unit for measuring thirst? Is there any unit for measuring thirst? If you are thirsty and you want to take or you want to drink water, let's assume this is your threshold. Let's mark out this area as our dealing range, because this is the dealing range, right? We have a fair value gap here. Let's assume your thirst level is from here to here, from 0 to 100, right? Here is, let's give it 70% thirsty. Here is 30% thirsty. This guy was just satisfied. Or this guy was just giving water to satisfy just 30% of his thirst. What can you say this guy will do next? Will he press for more into this guy so that he can satisfy his thirst to 70%, or he's going to continue moving on this journey without bothering satisfying just 30% of his thirst? Which one do you think will happen first? I'm just giving you an example from the weekly. Now you can see that yes, it has to come down. It has to come down. This guy will be interested in coming down into this area. Why? Because the guy is still thirsty. He needs more water to take or to drink. And this is the only place this guy can feel satisfied. This is good, but then not enough. This place is good and is enough. So dealing with this guy, which is a liquidity, buy side liquidity, BTC is facing down. Now the rest of the business is left for you to do on the 4-hour and the lower time frame. The 4-hour time frame, what is it telling you? What is the 4-hour time frame telling you? In essence, the daily time frame is ranging. That's why you see the 4-hour time frame is also ranging. So this area becomes a very difficult area. As it is currently on the daily time frame, you are bullish because you had a shift here, right? Price even respected this bullish breaker. But then, because we have done so much work to know what the weekly is doing, this range is now a no-go area. I will stay away from BTC if I were you for now, except if you want to scalp. Then the 15-minute time frame will be your friend. The 15-minute time frame will be your friend for the moment, right? But when you see the higher time frame is ranging or this kind of areas, you're going to have a lot of trouble. All right, there are so many assets in the market to trade, so go and look for another one. All right, what is the next one? What is the next one for us to analyze? EU. I don't know why you guys kept saying EU. Okay, let's see EU. Okay, EU. What do you have on EU? I even have some markings on EU. I don't know what I did anyway, but okay, I see. EU is trading bearish. You now see what I'm saying. EU is trading bearish. Let's go to the daily. Let's go to the weekly. What can you see from these charts? EU is more complicated than anything else. The only thing we know about EU is that the weekly time frame dealt with this buy side liquidity, right? And before you trade EU, you must know what is happening to DXY. EU does not have the power to move itself. It depends on the movement that DXY presents for it to move. So in essence, what we have here, I think there is a bullish order block here, and this area is a very significant area. There is no imbalance anyway. So anything I see without imbalance, that's a fair value gap. It has less relevance for me. So going to the daily time frame. On the daily time frame, we see an imbalance. Be careful. Be careful. This place might be the turning point. Be careful because price is still bullish. So tapping into this guy can create a sudden movement back up. And I hope you know that we are not yet bearish. We have not shifted structure even on the 4 hour. This is an active candlestick, right? It is an active candlestick. Hence, the reason why you need to be careful. Price is now pushing into the daily time frame fair value gap, but then we are still bullish. If we close below this guy, then the next point of interest is going to be this guy, this fair value gap, right? Is the only guy we have facing down, and that will create a surge back up to create what we call a bullish mitigation formation, right? So you will have to do your analysis on DXY to know what is going to happen here. Are you guys with me? NAS 100. Okay, let's do NAS 100. I think that should be the last thing we should check. NAS 100. NAS 100. And then for those of you who are trading purely cryptocurrencies, I have a free signal community for crypto traders, but only those who have signed up with my Bybit link. I'm going to place the Bybit link in the description of this video. You can find it there and sign up with Bybit with my link and then get access to the community. And you can let me know if you have any question, or you can just send me a message on WhatsApp. I have my WhatsApp link in the description of this video. So this is NAS 100, all right? What do you think NAS 100 is doing on the weekly? I have seen this buy side liquidity. All NAS 100 was trying to do is to get this guy. But for any reason, if NAS 100 is not getting this guy, it's because this bearish order block is very strong. Do you know the type of order block I call the high probability order blocks? Are those order blocks that have imbalance close to them? All right. So this bearish order block might create a serious challenge for this buy side liquidity. Sorry for that. All right. So what we have here is price responding to this area. Let's see on the daily time frame. Price is still bullish. Don't get it wrong. Price is still bullish. The 4 hour price is, let's see the 4 hour. Okay. Price is bullish, right? We had a shift bearish and another shift bullish. So this fair value gap is for the buy. Price is still bullish because of that buy side liquidity on the weekly. So if I were you, I will prioritize a bullish movement than a bearish movement, right? We had a shifting structure bullish here. This is also a shifting structure bearish. It happens like that. Price can shift structure and do another shifting structure. Many of you don't even know what shifting structure is. I don't have that time. I will have taught you that. All right. Here, this is the area. How about the 15-minute time frame? Wait for your confirmation. This is a confirmation, swing low formation. What do? You look at this guy. Do we have something very serious here? A small fair value gap that price has used. That is a buy signal. Close of this guy. Your stop loss right below this guy. Where's the movement? Into, let's go to the 4 hour. I will have said go to that area. All right. So that is the trade. All right. Look at your time. If you're within a time that is good, you can allow that trade to go your way. Close out my NAS trade early because price sold off very heavily. The correlation between DXY and EU is because DXY is the dollar, EU is euro and dollar. Confuse me? Depends on what you have with you. Okay, so we have done 40 minutes already. If you are still with me, let me see you tap the thumbs up. Tap the thumbs up. What is DE40? What is DE40? I don't even know what you're saying. Okay, somebody has been begging me to do UJ. Ah, UJ. Okay, let's see UJ. USD JPY. If you do anything on GJ, you should know what is happening on UJ. So UJ is confusing. I don't even know what to call it or the direction. All right, but it's more of a bearish movement. It's more of a bearish movement for me, and I will have advised you to stay away from it. Hmm? When you see price not giving you a clear direction, it's not by force to trade it, right? Yeah. Euro GBP stopped you out. I don't know. There is nothing like internal and external market structure. Just know your market structure. Stop confusing yourself. Just know your market structure. You people consume a lot of useless knowledge on YouTube. All right. You people consume a lot of useless knowledge on YouTube. You don't need to know everything in this market to be profitable. Just know the ones, the basic things, You just need to know what is the direction of the market, learn how to do top-down analysis, know how to navigate different time frames, and then you'll be okay. Okay, you would be okay. A bad mindset. Bad mindset. You can handle bad mindset by working on yourself. You know, the truth is that change has to start from within you before it can reflect on the outside. Your outcome in every strata of life or every human endeavor, the outcome of your life is dependent on the quality of your mindset. And most people don't understand that energy is everything across your activities. Energy is the determinant factor of your outcome. The way you do one thing will determine how you will do another thing. So most people feel like it's only trading that needs, or it's only trading that needs mental transformation. If you transform your mind in a generic form or in the across every area of your life, it will reflect even in trading, right? You can work on your mind, read books, um, listen to people like Mark Douglas, listen to people that have results in the markets. Don't just follow people randomly without knowing what it is that they are doing. Follow people like Bob Proctor of blessed memory. A lot of these guys can help you work on your mindset. It's your mindset that is your problem sometimes, right? The mind is the engine that creates your reality. Yes, everything you see in the three-dimension world starts from the mind, starts from your mind. And you can also take time to stay away from the markets, learn how to discipline yourself. Okay, I teach volatility, but then I think I should do a video tomorrow on VIX, just a normal YouTube video on VIX, because it's been a while I've not done a video, right? Yeah. So thank you very much, guys. I will be off, and we'll see tomorrow. Thank you. Bye bye.